It's been about 2 decades since the first set of non-interest financial institutions began operations in Nigeria. Since then and until today, we have seen a flurry of fund managers provide ethical investors with exciting new opportunities to grow their wealth. These developments have been lost on most, partly due to the low level of awareness and largely because many don't seem to understand the risk and returns dynamics of the financial market. Good morning and welcome to the Islamic Finance Weekly, where we discuss key developments in the non-interest finance market. On this show, what we do is providing the vital information needed to become financially savvy and open to the vista of Sharia-compliant wealth. Today, we are going to discuss the dynamics of portfolio management in non-interest finance. To discuss this with me is Mr. Chidi, Head Investment Strategy and Research at CitiTrust Asset Management. Good morning, Mr. Chidi. Nice to have you for the first time on the show.
Good morning, Bukola. Thank you for having me.
You're welcome. Let's begin with the observation that many people literally shove much of their funds under the mattress. So do you think people understand what inflation does in depleting the value of stored cash?
Thank you very much for that question. I think that everyone is familiar with the term inflation, but different people have different concepts of the meaning of inflation. Generally, most people understand inflation only as a rise in general cost of living. Very few people understand that inflation also has an eroding factor on their savings, right? And the general rule of thumb is this: if your income over a measurement period isn't increasing by at least the inflation rate, then it means that your purchasing power is reducing and, also your wealth. Therefore, it only makes sense that keeping large stockpiles of cash without investing them isn't a very wise investment option, especially in places where you have very high inflation rate. Inflation numbers were just recently released for August, and it turned out to be about 17.01%. What that means technically is between August 2020 to August 2021, the general prices of goods and services have increased by 17%. So in a typical scenario where your income hasn't increased by that same amount, or even close to that, you can already tell what it will mean for your cash deposits.
All right, indeed, there is a lot to learn from as it concerns exploring savings and investment options, as you've explained. So at the moment, people tend to invest in either large cap stocks or properties only. So is there a method to portfolio investing to optimize returns and minimize exposures?
One thing every investor must note is that risk and return are two sides of the same coin. You can't separate both, and you can't have one without the other. So you have to be wary of opportunities that offer you one side of that coin without a commensurate dose of the other side. It's really important that investors take a risk and return approach when deciding what type of investments they want to invest in, right? One thing you realize is that people do what I'll call come one, come all investing. That means if it worked for Harry and it worked for Tom, it should work for me. That's a very bad move. You can't also want 0% risk and expect 100% return. There are no such opportunities like that, right? So best thing to do is to understand your risk appetite. Risk appetite is just a measure of your willingness to bear financial risk, right? Once you understand where you lie in terms of your risk appetite, then that can inform your security selection and, of course, your eventual asset allocation. So it makes sense, therefore, that the return that you get is a compensation, a due compensation for the risk that you are willing to take. Now, going back to your question, you find out that large cap equities over a short term are more volatile in their returns than real estate investments. Real estate investments are not as volatile, but they are also very illiquid, in the short term. So if you understand where you stand in terms of your risk appetite, there are other measures you then need to put into place. So what are your liquidity constraints? If you know that you need short-term capital, right? Or you're going to be having obligations, maturing soon, then you cannot go and place your funds in long-term instruments like real estate but with the likes of equities, if you're younger, say in your mid-20s, 30s and all of that, and you have the time and you have the spare capital, you can embark on investing in equities because you know that you have enough time to even out that volatility of return. And of course, they tend to be more liquid than real estate. So there are a lot of balances that one has to make before embarking on, any of these investment opportunities. But first of all, you need to understand where you lie in terms of your risk appetite, and you need to understand that there really is no investment opportunity that has 0% risk. You have to be willing to bear the risk and, accept or accept whatever return you get at the end of the period.
Very insightful point from you, Mr. Chidi, on portfolio investment, the risk appetite, and for people to really understand the type of investment they really want to venture into. Thank you very much. So there are loads of supposedly Sharia-compliant fixed income funds out there. So how did they work? And if you may mention a few of them that offer great returns to Halal investors.
Okay, thank you very much. I would like to focus on the public funds, the public mutual funds. When I say public, I mean, SEC-approved mutual funds that, are available to public investors. But basically, one thing that, I find striking is that between December 2019 to August 2021, you find out that the NAV of Sharia-compliant mutual funds have grown by 174%. And this is their NAV contribution to the total NAV of all mutual funds in Nigeria. So speaking of ethical funds, I think a lot of people confuse ethical funds with Islamic funds. First of all, not all ethical funds are Islamic funds, and not all Islamic funds are sukuk funds or fixed income funds, right? So in the market, there are about at least 9 ethical funds. Of these 9, 78% of them are Islamic funds, and 22% of them are just ethical funds.
Okay.
For the Islamic funds, you have 43% being mixed funds, and I'll come to that in a second, while 57% of the rest of them are fixed income funds. So that's where you have the likes of, the sukuk funds and other fixed income products under that segment. For the mixed funds, you have a balance of equities, real estate, and some fixed income, Sharia-compliant fixed income instruments. So giving you a breakdown, it's interesting to also note that for the fixed income funds, you have a very good mix between, sukuk instruments, Ijara contracts, Mudaraba contracts, and, several other contracts that, have been used to create this structured finance or assets that the funds can invest in. Other components you would find, although in very small quantities, are non-interest bank deposits. Right, so these are just created to create liquidity, especially for funds that have very short-term investment cycles. Another interesting factor is that, for the Sharia fixed income funds, the minimum return you would find in that segment is that all those funds are doing above 4% return, right? And this is this is as at August 2021, figures as at August 2021, end of August, you will find out that there are about 4 of them that are core Sharia fixed income funds, and they deliver really decent returns. The highest of them is doing about 8.4%, and then the lowest of them is doing just 4%. So I think that would provide very decent opportunities for halal investors who, really want to key into this type of funds.
Well noted, and thanks for sensitizing us on the various type of halal investment options in the market. And I believe that ethically minded investors will take note of this, as you've explained, that we have like 72% of Islamic funds in the market. So let's talk about exchange traded funds. What value do they possess in comparison with mutual funds, which are generally not traded on the exchange?
Okay, first of all, the first thing to understand is, what are ETFs? Very few people actually understand how ETFs operate or what ETFs are. ETFs are nothing but securities that track the performance of an index, a commodity, or a basket of assets, right? The difference between a typical ETF and a mutual fund is that the ETF is a proxy, right? If you buy an ETF, you can be buying or tracking an entire index or an entire basket of assets. But for mutual funds, you're actually purchasing those assets yourself, or the fund manager is purchasing those assets himself. So with the ETF, it's basically one security giving you access to, an index, broad basket of commodities and the likes. So the differences obviously will be that ETFs typically charge less fees because of the fact that they are passively managed, right? A typical example would be, for argument's sake, imagine the S&P 500 ETF. If I had to track or replicate the S&P 500, it means I'll be having to buy 500 stocks and monitor those 500 stocks. But if I buy the ETF, I'm buying a security that is tracking those 500 stocks. So the performance of those 500 stocks, or the return on those 500 stocks, is already my return by virtue of the fact that I hold that ETF. So basically, that's how ETFs work. And they charge less fees because there's less trading, there's less turnover, as it were. And it also has tax efficient benefits, right? Because they are generally passively managed, you have pretty much, with mutual funds, you have more capital gains because mutual funds are actively managed and capital gains are typically taxed, but ETFs are typically passive. So, they tend to offer investors, a lot of tax benefits, which is why ETFs are very popular in the developed markets.
All right, Mr. Chidi, thank you for the enlightening session on ETF, mutual funds, and the opportunities they provide in the market. All around the globe, there is a VC buzz trending right now. So what Sharia-compliant venture capital opportunities would you recommend in Nigeria?
Good question. First of all, venture capital is a form of private equity, that allows investors to provide finance to startup companies, yes, or small companies in their growth phase. But the key thing is that all of these companies have to have one thing in common. Okay. And what that thing is that they must be able to provide, high growth opportunities or high growth potentials in the long run.
Yes.
So before a company, a small business, a startup becomes a target for a venture capitalist, it has to showcase that it can, metamorphose into something really huge in terms of profitability. Okay. Speaking to the Nigerian market, I think there are a lot of wonderful opportunities for, VCs in Nigeria. And this is clear because in Nigeria, you have a large and growing young population, right? So I think, as we've seen, the first segment, or the first, will I call it the niche, target for VCs is tech.
Yeah.
There are a lot of tech startups now, fintech and the likes. There's also a lot of opportunity in agriculture. We know that Nigeria is facing huge agricultural deficits, noting its growing population, and of course, which brings us to agri-tech,
Yeah, exactly.
the likes of crowdfunding and, the rest. Also, you have vast opportunities in real estate development, and, housing projects and all of that.
You talked about real estate before, so you're still mentioning real estate. So it seems that there is one big opportunity in that real estate you're talking about.
Yes, there is. Yes, there is. And you find out that there is a huge housing deficit in Nigeria.
Like over 17 million housing deficit.
Yes, and it's growing. It's growing, right? Another industry that I think I find interesting, but many people don't speak about, is pharmaceuticals and drug production. Okay. Why do I say this? Because, for instance, the pandemic has taught us how vital that industry is. Along with tech, the tech industry, pharmaceutical industry was one of the other industries to grow hugely during the pandemic. And this is very clear, right? So the opportunities there. When you have a young and growing population, you understand that, you have to build your health systems to, provide infrastructural buffers for, your population and your economy. And then lastly is manufacturing. I think there's huge potential in that industry that, VCs can take advantage of.
Thank you very much, Mr. Chidi. As you've highlighted, the pharmaceutical sectors, the real estate, agriculture. You didn't talk about education.
Yes, of course. There's the educational sector. One thing you should understand is that industry is very dynamic. You'll find out that VCs look for opportunities with growth potentials. You do not set up a school because you want to make profit. Eventually you may, but I don't think that should be the first thing, people who manage schools are looking at. When you're managing a school or when you're setting up a school, you are ready to render service, yes. Right? And it's a long-term service. If it becomes profitable, well, perfect. It's the best of both worlds. VCs are also business people, right? They aren't in it for opportunities that will not create the type of returns they want. So the educational sector is dynamic in the sense that, you're going into it for, first of all, that vocation to render service. And then secondly, of course, to impact lives, to, educate the young ones. And if you can generate a profit while at it, perfect. But I think in the hierarchy, profit generation should come not in the first place for the educational industry.
So all the sectors you highlighted will attract the startups, Islamic venture capital in Nigeria. So would you say in the last 5 years, we've seen a hockey stick rise in the variety of Sharia-compliant assets available to investment-conscious individuals?
Absolutely, I think so. And if I can go back to the public mutual funds I spoke about, I highlighted that the percentage weighting of the NAV of Sharia-compliant mutual funds has grown by 174% in 2 years, right? And I think this is just the beginning. There are more opportunities out there. And, these funds do not just comprise sukuk bonds alone. They are a combination of different contracts, Ijara contracts, Mudaraba contracts, Murabaha contracts, Musharaka contracts, real estate, and some equities, right? So the world of opportunities there is inexhaustive. I think the great thing about Islamic finance is its ability to sustain socially responsible economic growth. And Nigeria is at that point where we need all kinds of economic growth, right? So I think the opportunities are endless, and there's potential for more growth.
Exactly. There is potential for more growth. Thank you, Mr. Chidi. The last question I have here is that, as the demand for Sharia-compliant assets met your expectation, like taking the rise on the supply side into consideration?
Okay, brilliant. Speaking about the supply side, I've just mentioned, how pivotal Islamic finance's role is in the economy. For example, you have the Nigerian government tapping into sukuk bonds to improve, the development of infrastructure. We've seen that with their roads, highways, bridges, and so on and so forth, right? Yeah. I think that in no distant future, we'll also begin to start seeing green sukuk bonds in, very high supply. And this is because, the world is geared towards achieving a net zero ambition by 2050. And so we're going to start seeing more eco-friendly developments. And of course, that would also attract a lot of, finance. Another thing we can even think about is the housing deficit. Imagine, what institutional contracts can do to bridge that gap that we have in Nigeria, right? So it's no surprise then that the SEC has reiterated its commitments in driving and developing the non-interest capital markets in Nigeria. So of course, I think market forces will come into play and eventually demand will match supply.
All right, thank you very much, Mr. Chidi, for your detailed presentation on the dynamics of portfolio management in non-interest finance. We appreciate your contributions on the subject matter, particularly where you said there is potential for the growth of Islamic finance, and at the point Nigeria that is facing the infrastructure deficit, Islamic finance is a must for the market to thrive, and Nigeria really needs to make use of the alternative finance. Thank you very much, Mr. Chidi. Do have a great day.
Thank you so much. Thank you. Me too.
Bye. The proliferation of portfolio investment funds in the Nigerian non-interest finance market has provided ethical investors the opportunity to diversify their investments. With effective regulations and innovative products, analysts and experts believe the Sharia-compliant assets and fixed income funds will continue to attract interest from investors. This is a positive trajectory and an opportunity to further the deepening non-interest finance market in Nigeria. This is to inform you that the Islamic Finance Weekly webinar will be holding its second edition themed Islamic Finance and Insurance on Wednesday, 22nd of September 2021 by 10 a.m. West African time. It will feature as keynote speaker Mr. Olorundare Sunday Thomas, the Commissioner for Insurance NICOM, and other key experts in the insurance industry. To participate in the webinar, register via the link below showing on your screen. It promises to be an enlightening session. And that brings us to the end of today's session. Visit ProShareND.com website to read more on Islamic finance. Click on Web TV banking channel to watch the Islamic Finance Weekly videos. You can also follow us on our social media platform displaying on the screen. Many thanks for watching. See you next week Friday for another exclusive interview.